The following is a presentation of TFNN. Now, the author of Mastering Probability, Steve Rhodes.
Good morning, all you wonderful money masters and treasure hunters. Welcome to the March 21st terrific Thursday edition of the Opening Bell. I'm your host, Steve Rhodes, and thanks so much for joining me, folks. Hope you had a great Wednesday out there, and we've got a great Thursday in store for you for sure. Live programming from 8 to 6 p.m. That is a beautiful thing. And, folks, I am here just simply to help you to just become a better money master, and always to provide you with the tools that just simply help each of us in order to lead an inspired life. So let's go take a look at one of our tools out here. I love this tool. I've told this story a few times, and I love true stories. True stories are really, those are the ones that, truly are inspirational. This story is called Your Hidden Treasure Out There, and it applies to each of us. Now, W.G. Montgomery, he wrote about two brothers who landed in New York back in 1845. So we got to go back just a ways. And the older brother, he had learned the trade of making sauerkraut back in Germany. And hearing of the possible fortunes to be made in America, he and his brother, set out for the States here. And he actually, the one who knew how to make a sauerkraut, he decided to head out to California. And his goal was to grow cabbage, make cabbage into sauerkraut, and just simply begin a business. And his venture was extremely successful. And eventually, and he continued to plant more cabbage and just simply grow everything. And he was very content with life. Well, his younger brother remained in New York, and he worked the day attending, he worked during the day, and in the evening time, he went ahead and attended school, and he was taking a course in geology. And he learned about, rocks and soil out there, and a few years had passed by, and finally he decided to go visit his brother in California. So he hopped aboard the stagecoach and made his way out to California. Wouldn't that be cool, to travel by stagecoach out to California? Of course, that would take a while here. And upon his arrival, the older brother, he took him into his cabbage patch. I mean, he was proud. He wanted to show him all the crops that he had grown out there. And the younger brother began to pick up handfuls of soil. He's, bent down, picked up handfuls of soil, throwing it down, picking up more. And he said, "This is mighty fine soil you have here, brother." And they both walked down to a near stream, to a stream that was nearby. And he reached down and he picked up some more of this soil. And he started, looking through his hands. And he said to his brother, he had picked up another handful. And he looked through it. He said, "Do you know what this shiny stuff is here, brother?" And he said, "No, I don't have any idea." He said, "Well, this is gold. You've been growing your cabbage patch on a gold mine out there." Folks, that turned out to be one of the largest gold mines in California out there. Progress and growth, folks, they are so possible. They are so possible out there. Oftentimes there are things really that are right in front of us that we just simply don't see. I know that's why you tune in here at TFNN. Talk about things that are in front of you that you just don't see. This is Terrific Thursday, and it's Terrific Thursday because this evening from 6:30 to 9 p.m., Bud Rolfs, he is going to show you things that are sitting in front of you that you just haven't seen. He's going to show you how to use primary trading ranges. He's going to show you how to use channel lines. He's going to show you how to properly do it. You're going to be amazed. You're going to say, "I've been looking at these charts all this time, and I never realized that those lines were out there." Just like these two brothers, just like one brother was growing a cabbage patch, and it turned out to be one of the largest gold mines out there. How about if your charting system that you're using, that you find all of a sudden the real gold mine are all these primary trading ranges? All the details on the homepage of TFNN.com. Come over to that homepage right now. Sign up, even if you can't be here this evening at 6:30. It's Eastern Standard Time when it will begin. Even if you can't be here, it'll be archived on your members page. So there's no reason to not join Bud and all the other great Tigers that'll be here this evening. As we go take a look at these markets here, kind of a flat open. It's going to look like with futures here, may open a bit lower, but nothing really significant. Let's start off by taking a look at the ES Mini. We've got the 30-minute chart up here on the screen. If you're listening in on TFNN.mobi, thanks so much for doing that. Maybe you're listening on the radio as well. Remember, this show streams live to you on your smartphone, your iPad, your Google Pad, and the easy way to do that, go to the homepage of TFNN.com after you've signed up for Bud Rolf's course. Over on the right-hand side, you'll see that little button with those 3 smartphones. Click on that. This show will stream live, and the archive of this always on Channel 9 out there. So as we take a look here at the ES Mini, we can see really, if we take a look at Sunday evening at the Open, that's where my cursor is over on the left-hand side. You had a low made out here. You had a bullish golfing candle that came in right at about the 1529 level. So what the ES Mini has really been doing, it's really been consolidating here between a level, the high out yesterday right at about 130, after the release of the Fed minutes. Really a very kind of muted session with regard to Uncle Ben's release of minutes. So that really didn't set anything off. But if we take a look at the consolidation level, you're really talking about maybe about 1555 down into the 15, maybe about 1535 out there. So a decent range for sure, 20 points. Right now you're up towards the top of the range. You're neither overbought nor oversold if you're taking a look at relative strength, relative weakness indicator in the bottom portion of the chart out there. So on the ES Mini, not really much happening out here. What would be a real breakout? Well, let's go take a look at the daily charts out here. A real breakout would be a close above certainly the high of March the 18th. That high out here, if we take a look at more March 15th, why don't we use March 15th as the high? That level is 1558.75. We had a little gap down on Sunday. That gap has been tested. In fact, let's just clean up this chart here just a bit. Let's just do that for you. Let's actually take a look at the gap here. Well, that gap, no, never was a gap because intraday on the 18th, it actually got up and tagged that level. Right now, what we had yesterday, if we take a look at the March 15th low, that low, 1549. Yesterday's close on the futures contract was at 1550.50. It closed inside that, says, well, you know what, you want to go up and test the highs. Trading a bit lower here, but would not be unusual at all for it to go test those highs. That level, 1558.75. We can see here, you've got the 1.618 butterfly sell pattern really still in play here. We know that these are reversal patterns in the marketplace. If you do see a reversal, the minimum bounce that you ought to get, the minimum retracement that you ought to get, at least is that dead cat bounce. That'll take you into that 1475 level. You can see just above that is really your next set of swing points out at the 1481-ish range. So that would make sense if the market decides to pull back. And quite frankly, that would be very positive for the bullish, just simply to free up some of this overbought condition that exists in the marketplace. But one thing at a time, as long as we're in the daily charts here, let's go look at the daily charts for the Dow futures, for the NASDAQ futures, and for the Russell 2000. Let's take a look at the Russell 2000 first. As we take a look at the Russell yesterday testing. Now we're going to take a look at that March 15th swing point as well. Low on that swing point, 945.10. Now 945.10, we've been testing that, or the Russell has been testing that, I should say. It tested it on the 18th. It tested it on the 19th. It tested it yesterday as well. And yesterday's close 944.70 versus 945.10. 940. 470. So a rejection again yesterday of that swing point. And today so far in trading, it's gotten up to 945.40, trading out at 943. Now, it's important to be paying attention to the Russell 2000. Why? Because that has been strength in the marketplace. No question. Russell 2000, just like the Russell 2000 got up over its highs before the Dow did. So it's important to be paying attention to strength when you're trying to identify is there any weakness in the market, just as it is to be taking a look at weakness to see if there's any potential strength in the marketplace. So far here, what we can say about the Russell 2000, some of the strength in the marketplace is it has rejected, its swing point high from last Friday out there. Now, if we go take a look at the other side of strength out here, that'd be the Dow futures. Dow futures yesterday, Dow itself making a newer high, just a slightly newer high, getting up over its highs, and then closing back below it and doing it on light volume. If we go take a look at the diamonds, which we'll do, in a little while, we'll see the volume comparison out there, the easy volume comparison. Now, as we take a look at the Dow futures, you're also dealing with that March 15th level. The March 15th in the futures, it did not get above the, I don't believe it got above the March 15th level. Yesterday, that high was 14,476 versus 14,480 out there. Yesterday, you did get a close inside that March 15th bar, that low, 14,397. Yesterday's close was 14,422 out there. What's that say? It says, okay, it wants to run and at least tag the highs. Now, what we're seeing out here, no real conviction for quite some time. In fact, last conviction, I'll use conviction. You can use conviction in really two different ways. One way is by doing it with price. And when you're doing it with price, what you're looking at is you're looking at the size of the body of the candle. Yeah, you can take a look at the entire candle itself, but the wick of the candle, that's really just measuring the extreme motions to the upside and the downside. It's really that body that provides you with the price range out there, that provides you with what kind of conviction, I shouldn't say price range, but with what kind of conviction is inside the move. And really, we've had nothing but small-bodied candles. Now, small-bodied candles, folks, they do tell you a sign of a market that doesn't have any conviction behind it. Something to think about. In any event, let's go take a look at the NASDAQ out here. Let's go take a look at the NQ futures. NQ we know, so we've got the ES Mini. We've got that at a 1.618 butterfly sell, and we've got the NASDAQ futures at the 0.786 Gartley sell pattern out there. So in the tug of war between the bulls and the bears, we've got two clear sell patterns that exist out here where you normally would see some type of move. In this case here, these are sell patterns, some type of move lower. What we've seen the NASDAQ do is also just simply move sideways. Just take a look at those small-bodied candles out here. Now, the positive on this is if you take a look at this trading session from March the 5th. That low has been tested, but just simply hasn't been able to have been broken. Neither has it really been able to have been broken to the upside here. No real continuation patterns, but just simply price traveling in a very wound-up nature. Just like I mentioned silver yesterday. I mentioned silver when we took a look at the trading pattern. In fact, let's go switch over to silver right now. As we take a look in the futures market here, silver is trading up about 35 cents, so 1.25%. And what silver is also trying to do, silver, even though this is not a hammer candle, the same candle formation on January 4th that came in inside the gold contract, I'm going to treat this as a version of a hammer candle. And right now you've got silver trying to get up above 29.24. It's trading at 29.17 right now. It gets up above that, it's giving you a bullish sign. 877-927-6648. I'll be right back.
What type of investor are you? Conservative, moderate, or aggressive? No matter your investor personality, your overall portfolio should reflect your financial goals, time horizon, and your risk tolerance. Help ensure your portfolio is appropriately invested with an asset allocation plan from Morgan Stanley Wealth Management. Simply picking the right stocks is not enough. Research has shown that choosing the right proportions of stocks, bonds, and cash is essential to the success of your long-term investments. Morgan Stanley believes a carefully selected portfolio can lower volatility and increase investment return potential. Find out about what an asset allocation and a Morgan Stanley Wealth Management financial advisor can do for you. Call Angela O'Brien, First Vice President and Financial Planner of the Clearwater, Florida branch at 727-441-6108 today to discuss your personal financial needs. Asset allocation does not assure a profit or protect against loss in declining financial markets. Investments and services are offered through Morgan Stanley Wealth Management, LLC. Member SIPC.
With the launch of TigerTV, TFNN has brought our programming to the next level. With TigerTV, you can gain access to each host's charts and computer screens as they host their daily stock program. Whether it's Tom O'Brien, Steve Rhodes, Basil Chapman, Ken Shreve, David White, Larry Pesavento, Victor Jones, or Carol Martin, you can catch all of our technicians hosting their programs live and archived on TigerTV for your viewing pleasure 24 hours a day, 7 days a week. If you haven't checked out TigerTV, then visit TFNN.com and see what you're missing.
McEwen Mining is a high-growth, mid-tier producer in the Americas with a market capitalization of $1 billion. Experienced mining executive Rob McEwen, as chairman, CEO, and president, owns 25% of the outstanding shares of McEwen Mining and has put in place an ambitious business plan with the goal of qualifying for inclusion in the S&P 500 by 2015. With $70 million in cash and liquid assets as of the end of 2012 and completely debt-free, McEwen Mining is poised for growth. Production in 2013 is forecasted to grow at 24%, reaching 130,000 gold equivalent ounces. And over the next 3 years, McEwen Mining projects that their production will increase to 290,000 gold equivalent ounces, almost a threefold increase from last year's totals. If you'd like to find out more about McEwen Mining, click on their banner on the front page of TFNN.com or check them out on the NYSE or TSX under the symbol MUX.
Are you looking for a precision edge in the market? Something that can stack the odds in your favor? Then look into Larry Pesavento's new trading newsletter, Patterns, Profits, and Peace of Mind. In each weekly issue, Larry explains what's going to happen in the markets based on the pattern he sees developing and gives you actionable trade ideas based on those patterns. Plus, you'll get his detailed analysis on a variety of markets and sectors, including stocks, treasury bonds, the gold market, oil, the dollar, the forex market, and more. And you'll get the Technical Corner segment, which is a short but powerful weekly training session on trading. You'll get access to all the patterns Larry is seeing in the markets, plus the Astro Harmonics and powerful Bradley stock market model that Larry utilizes for less than $5 a day. An extremely potent combination that will give you just the edge you've been looking for. Try Patterns, Profits, and Peace of Mind absolutely free for 2 weeks. Go to TFNN.com and click on the free trial link at the top of the page. That's an $85 value, yours free when you register right now. Get Larry's Patterns, Profits, and Peace of Mind and get the edge you've been looking for.
Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen live during those shows, and have access to all those charts. You can test drive the Tiger's Den absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com. This segment is brought to you by BackTech Environmental. For more information, just click the BackTech banner on the front page of TFNN.com.
Welcome back, folks, in the pre-markets here. Moving to the upside, you've got AstraZeneca, AZN. They closed at 46.18, trading out right now at 47.30. Let's see here. What is behind the move? If I could see anything out here, nothing other than just what's in their pipeline. You got Lululemon. Well, GLD is actually the next in line. The GLD closed at 155.37. Right now, trading up $3 out at 156. Lululemon having a bit of a bounce this morning after getting just totally hammered. Lululemon closed at 63.88. They're trading at 64.35. Arcadia Pharmaceuticals, ACAD, they closed at 665. Trading out right now at 7.19. Yahoo closed at 22.09, trading up just a tad, trading out at 22.46. To the downside, though, you've got Oracle out with numbers, real warning with regard to what's going on. Of course, you've got Europe here. You've got you've got Europe. That is seeing their economy absolutely slowing down. Oracle warning on that as well. Oracle closed at 35.77. They're trading down right now just under $33. 32.93 was the last trade. You've got, let's see, Royal Dutch Shell. They close at 65.93. They're at 65.02 right now. Cimatron, CIMT, they close at 6.39. They're trading at 5.45. Let's go back to silver. We'll take a look at silver, gold, then we'll go take a look at the currency markets here. So we take a look at silver. You can see the 1 to 1.272, A to B equals CD down. That, folks, is taking you from the highs out here back in October at the price point of 35.44 down to a low. Your B point on this, on the A to B equals CD down, is a November 5th low. That's $30.65. Makes a retracement. Let's go measure that retracement here from the A to the B point. We can see came in really right at exactly a 0.786 level. 34.42 was the exact number. Looks like what silver did was it got up to 34.42. Gotta love that. Right to the penny. How does that work? How did Leonardo, not DiCaprio, Leonardo Fibonacci, how did he know this stuff? Amazing. Anyways, A to B equals CD. The 1 to 1.272, that was actually formed here back on February 21st, February 20th out there. That price projection was about $28.29. And what the 1 to 1.272 got down to $28.25, $28.29 on February 1st out here. Got a little divergence candle. That divergence candle coming in on March the 1st out here. Now, the real key for silver, really, it has been wound up. I mentioned this yesterday. We were talking about those small small-bodied candles. Well, you take a look at silver and gold and really small-bodied candles, and it's unusual. Somebody go back and find out. I didn't have the time yet to really go back and try to find this, but that's unusual price nature out here to be so tightly wound. So it's kind of like, in my opinion, it's winding up tightly to break to one side. Now, at this stage here, I think it's to the bullish side, but that's just simply by watching what the large commercials are doing. But the large commercials, they take time. They're like a big ship out there, so they take time to put their position together, and they're willing to stick with it much longer than maybe you and I might with regard to our money management skills, but we can get in and get out, and I think that is the better approach. Now, silver here, because it has been weaker, in my opinion, than gold, and just simply measuring it by the candle of that February 20th level, what you're really looking for is you're looking to get above at least the open of that session, 2941. That area has been tagged hasn't actually been tagged. The high so far intraday, 2932, but that's really what you should be looking for, is to be able to get above that level. If we switch over and take from a bullish standpoint, if we take a look at gold, in the case of gold, that has already broken above there. So we're going to take a look at that exact same candle. This is the candle, the essence of price, that body out here. That is February 20th. That open was 1604.20. As we draw the line across the screen out here, you can see clearly we are now above that, been above that. Well, let me draw a straight line. That would be nice. Even on a computer, I struggle drawing a straight line. Not unusual out here. If we do take a look at gold, you can see closing above it on the 19th, closing above it even yesterday and today. Right now, of course, the session is not anywhere near over. So what gold is going to then do as far as give you your next signal, it is going to be this hammer candle. And this used to be an old level, or should have been an old level of support. It absolutely failed, and it failed really on its first test right here. This is the February 15th level. That price point, that low, is 1626. You get a close above that, old support becomes, or old support should have been, old resistance now will become new support. Now, because it has only been, it wasn't really even tested on the hammer candle, and it just broke below, it's kind of quasi, it's kind of so-so with regard to its resistance and support. But I still do like the price action that we are seeing here in gold and silver. Of course, what's that all about? Well, currency markets. What's it also all about? Oh, wow, we just had the Dow futures take off to the downside. We'll go in and take a look at that as the market opens. Then we'll come back. Well, if you take a look at the DAX, that's trading up 110 points right now. 877-927-6648. We'll be right back.
In quiet markets, investors search for new trading opportunities. We'd like to introduce you to a new product that provides opportunities even in flat markets. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full customization capability. Nadex's unique short-term binary options allow traders and investors to capitalize on strategies even when the underlying markets are quiet. Nadex's innovation has allowed them to come up with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors. Just recently, on December 28th, Market Insight subscribers were advised to go long the QQQ, the NASDAQ 100 ETF, on December 28th at $63.91, and only 2 trading days later, after a huge jump in the market, Market Insight subscribers were advised to sell the QQQ at $66.64 for a $2.73 or 4.27% profit to start off 2013. At the same time, Tom O'Brien had advised his clients looking for a more leveraged trade that they could have initiated a position in the QLD, the ProShares Ultra QQQ ETF, and over the same 2 trading days, Market Insight subscribers were able to lock in a $4.48 profit or an 8.47% gain in just 1 trade. Get your 2-week free trial to Market Insights today by visiting the front page of TFNN.com. Cancel at any time during your free trial and pay nothing. Don't Don't miss out on the next great trading opportunity in 2013. Act today. If you're an investor looking for a great weekly investment newsletter, then now is the perfect time to try out Ken Shreve's Ultimate Growth Stocks. Every Tuesday, Ken breaks down multiple sectors in his weekly newsletter, Ultimate Growth Stocks, with a full in-depth report including specific trading recommendations within his model portfolio, charts, sector analysis, upcoming economic data, along with intra-week trading updates on newsletter positions whenever the market dictates. Right now, you can receive a full month, that's 30 days, to evaluate Ken's newsletter free of charge to see if it fits your trading plan. At less than $75 per month, Ken provides you with his expert trading advice that can pay for itself in no time. Take advantage of this great offer by signing up for a 30-day free trial to Ken Shreve's Ultimate Growth Stocks today. Don't let this offer pass you by. Visit the front page of TFNN.com and sign up now. Daryl Martin coined the phrase diagnostic trading, and we're happy to announce that his diagnostic box spread analyzer has finally been released. The Diagnostic Box Spread Analyzer helps you easily identify the best box spreads on Nadex in seconds, plus you receive access to the diagnostic deviation levels, as well as step-by-step training videos teaching you how to trade Nadex spreads so you can quickly master the mechanics of this simple yet powerful trading instrument. By pulling live data from the Nadex exchange, the Diagnostic Box Spread Analyzer does all the math for you, calculating risk, reward potential, distance to break even for both outright spreads and spreads used to hedge the underlying market. Visit the front page of TFNN.com today to get your 2-week free trial to Daryl Martin's Diagnostic Box Spread Analyzer and gain access to the valuable information it can provide when trading the Nadex box spreads.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
And we're off to the races. We got the Dow up 63 points right now. S&P's down almost 8. Trading out at 1551. Composite down 22 points out at 3232. Small caps off 4 points right now. Microsoft down 15 ticks. Intel off 18. Cisco down 61 pennies, down about 3% here right now. Apple up 73 cents. Leading the charge to the upside, Fuel Cell Solutions, FSYS, up 5% this morning. That's up 89 cents. You've got ProShares. That's not take a look at that. You've got HomeAway. That's up 3%. AWAY. Haven't looked at that stock chart, so we'll do that this morning. AstraZeneca up a couple percent, like we saw in the pre-market, up $1 here right now. To the downside, you've got Air Gas. Air Gas is letting the gas out of its tanks, down $6.37. That's off over 6% this morning. Scholastic Corp off $3. That's down 10%. Oracle down about 9% right now, off $3. IBM off 1%, off $3 as well. Accenture down about $1.50 right now. Our call-in number 877-927-6648. But let's start off taking a look at the Queen. Let's go see what the euro is doing. We can see, the euro here really ping-ponging in between support and resistance. Resistance right now truly being set up by this swing point here from January the 4th out there. That low 129. 9, it looks like. The computer screen's a little bit from. My glasses need a little bit of refurbishing here. Or my eyes perhaps need the refurbishing. And so you got that level here, your black line if you're watching this on Tiger TV, and the support line right now being the swing point of December the 7th out there. That low being 128.75. And you can see here that very tight range, and I suspect that what we will see is we'll see the euro go ahead and bust through this support level. And when it busts through the support level, the question is, well, where is it going to go next? Now, what we can actually look at here on the screen here, we're taking a look at we're looking at the daily chart here. Now, the first area where it will move to will be its next set of swing points. We'll take a look at both the next set of swing points as well as the Fibonacci relationships between the actual low and the high out here. But where it should first head to is this next set of swing points, as often a market does. In fact, when you take a look at any stock chart out here, one of the things that you want to do is you want to be able to identify swing points. Now, you're looking for those major changes in trend. First, you start off by taking a look at the major changes in trend. When you take a look at the euro, you can see the major change in trend right here coming in at the November 13th level. You can see a major change in trend. I'll call it a major change in trend right up here around the December 5th. It's all visual. This is where a little bit of the art comes in. You see another change in trend with these swing points back here in December 10th, and so forth. You know, you got a major swing point up at the top. The top here coming in on the euro on February 1st out there. Nice bearish engulfing after that, giving you a signal that the bears wanted to take control of the euro. And so we're going to take a look at right now. So use those swing points as your first guide as to where price will travel to. They act as magnets out there. And it's really at those tests of swing points where certainly when you're taking a look at stocks and ETFs, when you're comparing volume, you can really understand what's going on. In the case of currency, you can't do that. There is no volume that you can rely upon in order to be able to do the same type of measurements that we do when we take a look at stock charts. What you can do, though, is use candles. You can use candle signals as one way. You can use Fibonacci numbers as another way. But where you're going to see a reversal, your most leading advanced indicators out there, in my opinion, are going to be using the Fibonacci and the A to B equals CD because you're drawing those patterns in advance. But the actual signal is going to come from when you actually see either the bulls or bears take control, whether the market is moving up or down. Now let's go take a look at the euro. Let's assume that the euro, for our purposes, because you can draw a number of different patterns out here. In fact, we can do it on both sides. What will happen if the euro actually gets stronger and people say, I want euros, I don't want U.S. dollars out there? Not likely. However, if we do go take a look at the, let's assume our first stance here is taking a look at the downside. Now, you know I've got these tools that draw these nice patterns out here. You don't need those tools necessarily. They're nice to have out there because it's so visual, because we're also visual when it comes to learning. But you still need to be able to do the math, and so that's what we're going to do right now. We're going to do the math just simply by using the technique of using Fibonacci retracement and expansion. So we're going to come all the way down to the low that was established back here in July of 2012, out at a price of about 120.52 out here. So we're going to come all the way down here and then all the way up to that high that came in on February the 1st. Now, what we can see, just simply from, and this the red lines going across my screen, it doesn't matter whether you can read the numbers or not, but that first level here is the 0.382 range. The next level, so once you're in between floors here, which the euro most certainly is, it's kind of in the middle of a floor, and it's almost like the elevator has stopped, and so they're just hanging out. What it's likely to do is it's likely to go down and visit the next floor because this is on a move downward. Well, if you take a look at that 0.618 level, you'll see that's that red line coming across the screen. Take a look at how it actually matches with that swing point from November 13th. Almost to the penny, close enough to the penny out there. So that is where the euro is going to first go to. If that area breaks, the question will be, well, where is it going to go to next? Well, what's actually cool is I also have that 0.786 retracement drawn on my screen. So when you take a look at the 0.786 retracement, that takes you into maybe about the high of August the 3rd out there, somewhere around 123.91, somewhere right around that level. Now what I'm going to do is I'm going to take an expansion. We're going to look at the largest expansion out here. We're going to use this 0.618 level. So we're going to come from the swing point low of November 13th out at 126.5. So we're going to go from that level all the way to the top of the range. Let me see if I can change the colors on this here. There we go. So that's changed in black. So now what we're looking at, well, let me see. Let me actually go back to this, and let me get rid of the retracements on here, just so that if you're following along on Tiger, if you are listening in on the radio or your mobile device, that's great. Just go grab the archive of this show. You'll know that it's right around the 9:40 time frame. So it was 9:30 when we started this, and you'll be able to take a look at it. And so now what I'm showing you is I'm showing you from the set of swing points. We're using the low of November 13th, and we're using the high of February the 1st out there. Well, there's a 1.272 expansion that comes right in here at the 0.786 retracement of that entire move. That is where the euro actually wants to head to, or at least that is where I would be looking to really put on a longer-term, long trade on the euro. Now, what has to happen? First, first price has to move down there. And does that actually set up a Gartley buy pattern? Well, in kind of a crude way, if we were to take a look at the pattern, let's actually take a look at, let's try the retracement pattern here. But just simply because of that strong move down, it hasn't really formed a really great B to C leg yet. So as we take a look at this pattern, its wings probably aren't going to look that beautiful, not like the other ones out here. I mean, it looks kind of like that, if you will. So that's not as important as being able to utilize these Fibonacci numbers when they come together. Yesterday, if you were listening to yesterday morning show, we had the 30-minute Dow chart up. Maybe it was the futures contract. And what we saw a number of Fibonacci numbers coming together at the same time. In this case here, what we see is the 1.272 expansion coming together with the 0.786 retracement. And if, in fact, the euro ever got down there, you'd have a lot of people saying it's toast, it's over, or what have you. The reality is you'd be waiting for the bulls. You'd be waiting for a bullish candle to come in and take a look at putting on a possible long trade. You would be buying weak hands. It's the exact same thing that we did. Some of you I know because of the emails that I've gotten from folks about the trade in the Great British Pound. It's the same thing that we did in the Great British Pound. Let's go over to the Great British Pound U.S. dollar currency pair. That's had a nice move interest session so far. But what we used here is right now, and this is the daily chart that we've got on our screen. I'll switch over. In fact, I'll switch over to the weekly chart. We'll do that. Then we'll come back in and take a look at the daily chart. But on the weekly chart, what you'll see here, number one, you'll see a nice A to B equals CD down. That A point on the weekly chart starting at the highs of February 29th. The lows coming in down at the level of January 13th, down about 152.3. That was your B point. Your C point happens to be the swing point high for May the 4th. So you can see A to B equals CD. Almost completed it to the penny. It got close enough. Remember, we use these as a guideline, as our range. What we can also see here, coming off of this little hammer candle, big hammer candle on a weekly basis here back in May 21st, 2008, coming off of that low to the high out here that was put in April 29th, what you also see is very close to the 0.786 level. Did it get down to it? No. Does it need to? No, it doesn't need to. Don't use these. Look, I am always just more amazed. Amused is probably the right word. I'm probably almost more amused when I do these retracement levels and they hit them to the penny. To me, that's not an indication that that's how it's supposed to work and that's what you're always looking for. To me, that's more of an amusement. Maybe it's amusement and amazement that, how does that work? But that's not what you're really looking for. You're looking for signals, and you need to understand the signals of the bulls and the bears out here. Now, a weekly chart's going to take a little bit longer to unfold with regard to its candle versus a daily chart, right? So you know what the range is here, and we knew what the range was in the pound. We watched the pound moving down. Now, what you can see here is last week, what it actually gave you was it gave you a nice bullish engulfing candle. Does that mean that this is that the pound is done going down? No, it's where you've got your back up against the wall. It's where you had retracements of moves, Fibonacci numbers out there, and surely a lot of people use it. So you have to manage the trade for sure. But if we go over and we take a look at the daily chart, in fact, if we were to look at moving averages, I don't even know but let's first just go over, take a look at the daily chart and try to keep me on pace here. And what happened on the daily chart as that move was unfolding is you had this hammer candle. Now, you had the hammer candle in the daily chart as you're down into a level of being oversold. That's a beautiful thing. There's also some divergence out here, the type of divergence that is associated with market highs and market lows. That was also in place as the hammer candle was being formed. You also had the bulls step in and formed a small bodied, but still they formed a bullish engulfing candle on that very next trading session. That gives you all of the confidence in order to be able to take the trade out there. It also says, look, you get a close below that hammer candle, and certainly the Great British Pound. In fact, not only will go lower, it'll go visit those lows back on the monthly chart out there. And that's how you use candles. That's how you use Fibonacci relationships in order to go ahead and be able to place the trade out there. Whew, how about that? Now, let's go take a look at some of these stocks out here that are popping and dropping. Let's go start off and take a look at Oracle, down 8% this morning. So let's go see what's going on inside there. Let's take a look at what kind of volume it is that we have. ORCL is the ticker symbol. ORCL. We'll put the daily chart up on the screen. Let's refresh my screen here. Looks like I'm having a slight little day. There we go. Now we've got it. So gapping down and doing so with a big volume. So let's go see what it's trading into. In fact, it's down at the last level of where it broke out. So let's go put the lines on the chart here. Right now you can see Oracle trading at $32.76. 16 minutes of trading. It has already gotten 21. So it has 21 million shares out of it. Now you can see here where it last broke out. Maybe you can see. I'll explain it to you. The last real breakout on Oracle came on December the 19th out there, and so that had volume of 60 million shares. Now we're going to first, and you've got a gap. That gap, it's trading below it right now, was tested once. Looks like that is no longer going to be an area of support. Now, the nice thing was that it was at least tested as support. So we'll make that a red line. Now, that gap here is coming back to the breakout. That was the December 18th session. The high of that gap, 32.95, 37 million shares. But really the benchmark here is the 60 million shares. What we can see here this morning is that price gapped down below where this actual original breakout gap took place at. So now if you were to get Oracle, the bullish sign would be to see a close today above $32.95. That is the high of December 18th. We can see that that level was tested on December 31st, and then it moved up above that. Now, even from a volume standpoint, I'm not saying you take the trade, but the most bullish thing that could take place is to understand where the bulls are hanging out. And what we know about Oracle out here is we know that there was a bullish move, a bullish breakout inside Oracle on December 19th. Now, as we come over here and take a look at this candle, you also had, let me just refresh my screen, you also had some volume up here at the highs. So as this made a high, in fact, as it made its high on March the 15th, it had 56 million shares out there. The problem is that today you're going to get volume off of those highs. So what you've got to, so here's a line that's been set up. Now, should Oracle close below this level, and based on volume, it looks like it might, what that really does set up is likely an area of what? Of resistance, because it used to be an old support line. Now, it would need to be tested a few times. You'd like to have at least 3 tests out there. So you'd like to be able to have that in order to set up a support line. So then where would Oracle trade down to? Well, let's come back and take a look at the weekly chart. We can see just in one day this has moved into the oversold level. But let's go take a look at a longer-term picture out here. Let's go take a look at the weekly chart. So here, as we take a look at the weekly chart, didn't realize I actually had it on my screen. As we take a look at the weekly, we're looking at the week of May 6th, 2011. Oracle gets up to 3650, does it with 141 million shares. Last week, as it got up there, it did it with 130 million shares. Kind of interesting. Gets up to a level of 3643. And the old high was 3650, so it couldn't get all the way up there, very close. Now on the weekly chart, looks like what you're really setting up is volume off of the top. Now, weekly has more importance than daily. Monthly has more importance than weekly out here. So on the weekly chart, this is saying, boy, Oracle is going to have volume off of the high. Where would its next stopping point be? Where would its next test area? Well, if you take a look at this floor here on the way up, where Oracle really wants to trade to, remember those intersections, those major intersections, those major changes in trend. In the case of Oracle, says it wants to come all the way back to November 16th level, $29.42. That doesn't really have much volume down there, but you'll have to just simply measure volume as Oracle gets down there. November 16th, 2012, that's where Oracle's headed to. Dow's up 51, S&P is off 6. 877-927-6648. We'll be right back, folks.
You've always taken the long view when it comes to investing, but what if there's an opportunity right under your nose? What if you could be more responsive to market trends to seek to boost your portfolio performance right now while seeking to reduce your overall risk? At Direction Funds, we connect investors with alternative strategies that seek to maximize their returns. Smart investors deserve smart alternatives. Find yours at directionfunds.com. An investor should consider the investment objectives, risk charges, and expenses of Direction Funds carefully before investing. The prospectus and summary prospectus contain this and other information about Direction Funds. To obtain a prospectus or summary prospectus, please contact the Direction Funds at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. Investing in index funds may be more volatile than investing in broadly diversified funds. Distributed by Rafferty Capital Markets, LLC. David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
Recently, Basil Chapman has had some outstanding trades in his newsletter, The Opening Call. Each morning by 9 a.m., Basil uploads his newsletter to the TFNN servers so that his subscribers can access his expert trading advice. Basil gives his take on the direction of key indices and updates any active trades that his subscribers are currently in. Just recently, Basil subscribers closed out a short position in Chipotle Mexican Grill, CMG, for more than an $86 profit per share, over a 20% gain in just one position. If you'd like to try out Basil Chapman's newsletter, The Opening Call, then visit the front page at TFNN.com and click Trading Newsletters. There you'll find Basil's newsletter, The Opening Call, where you can request a free sample copy. Also, don't miss Basil's program, The Tiger Technicians Hour, Monday through Friday, 11 a.m. Eastern, on TFNN.
Tom O'Brien's weekly newsletter, The Gold Report, has helped subscribers for over 10 years navigate the high-risk world of exploring and producing gold companies. And now's a great time to sign up for a free month-long trial to see the kind of insight that Tom delivers for his subscribers on a weekly basis. Every Monday, Tom O'Brien issues a quick update on the metal market, giving you his take on the HUI, XAU, GLD, dollar, bonds, and much more. Tom follows Monday's update with a full gold report, which is delivered to subscribers Tuesday afternoon with detailed coverage of 24 separate gold or metal stocks, as well as another 10 to 15 stocks that he lets you know are on his potential watch list. Get your month-long free trial to the Gold Report today by visiting the front page of TFNN.com. Don't spend another year navigating the metal markets on your own. Act early in 2013 and make the most of your gold and metal market investments.
Catch the Money Masters as they teach you the art of mastering money when it comes to trading and investing. Next on TFNN.
Welcome back, folks. Dow's off 55 right now. S&P's off about 6 points. And, as we opened up the show, there could be a gold mine in your cabbage patch. That cabbage patch could just simply be the charts that you're taking a look at. Go to the homepage at TFNN.com. Tonight is going to be an incredible opportunity for you to see what kind of gold is in your charting system out there. Learn some new tools and techniques, from our man Bud Rolfs. All the details, again, on the homepage of TFNN.com. It's going to be a great workshop. As we take a look at just some trend lines out here, let's take a look at the trend line on the FTSE. Take a look at the trend line coming off of the low here from November, in this case here, the November 16th, November 19th low. What we will see is today the FTSE is breaking through that trend line. Why is that important? Well, the FTSE has been, or the UK, the FTSE in UK has been a strong index. Let me see here. Has it made it? So it has not made its way over its 2007 levels. This is, as you see here, as we take a look at trend lines, this is kind of what I'll call a ultra short-term trend line, just simply off of those November 16th levels. But that's interesting out here that the FTSE now giving it up. Now, the day is not over. See where it closes. Once you break a trend line, typically what will happen is it will come back up and try to retest it just to see if it truly is a real break to the downside. But the FTSE here giving up, and where's the FTSE then going to travel to? Let's assume that this is a real break. Well, none other than you can first just take a look at this swing points. Let's assume you're still not that familiar with Fibonacci relationships, retracements, and expansions. You most certainly can take a look at any stock chart and take a look at where you see, changes in trends, these little swing points out. Not little swing points, but the swing points that are out here and inside the FTSE that'll take you into the February 26th level. If we go take a look at the DAX out here. Let's go take a look at the DAX, see what that is doing. Now, the DAX here right now trading down a total of 95 points. It's off a little over 1%. But what the DAX is doing this morning, it is trading right down into a level of support. Now, we're going to call it level 1. That first level of support is the gap up. It's going to be the low of the March 6th day. We can see we have a gap here between March 5th and the March 6th inside the DAX. And what we can see here, just simply by moving that line, now where you start with the line is certainly going to be the low, which is 79.9804. And back on the 18th, you actually got down to, not you, but the DAX got down to 79.01. 79.01 versus 79.98. You can say it wasn't a total test. To me, it is a test. You need to be able to move the line up just a tad up and down a bit, out here. And so what we can see that's going on today it's also testing that area. Now, level 2 with regard to support is really just below that. And that's going to be, let's say, the high of March 5th. I'm going to say it's a little bit below that. I'm going to say it's actually the body of March 5th, the close, which was 78.70. Because what we also have is like a little bit of an area here of resistance. So we're going to see the DAX, if it can close below, if it breaks below the level where it's trading right now. Again, we take a look at that little gap that's out there, really a small area of price in order to be able to get to. In fact, the low so far intraday has been 78.87.67, and the high out here 78.83. So still hasn't been able to get down there and even touch the high of March 5th out there. Does that mean that that's bullish? No. Right now, what you're looking for is you're trying to understand who has control here, bulls or bears. So even with the DAX being down 82 points right now, it is still the bulls that have control. Why? Because there's not been a level of support that has been broken inside the DAX. That's a little bit different when we take a look at the FTSE. Now, I can't use the same trend line here in the DAX. It doesn't make any sense coming off of November 16th. At least doesn't make any sense to me. It's not as clear. Folks, stay tuned. The Money Masters show will be up next. It is Terrific Thursday. That means Basil Chapman will follow the Money Masters. And then we've got Larry Pesavento. Larry Pesavento doing the Futures Hour. Daryl Martin, David White, Ken Shreve, and the Tom O'Brien Show from 4 to 6. If you're off to start your day, have a terrific Thursday. Look forward to seeing you in a few or tomorrow morning. Take care, folks.
Let me tell you something, folks. I have people coming up to me saying, I just can't believe the amount of work that Steve does on his newsletter. And I says, I absolutely agree.
That is a recent clip from the Money Masters show that Tom and I do each day at TFNN. My newsletter service, Mastering Probability, is much, much more than a newsletter. Yes, it's outperformed the S&P 500 by 100% during the last 15 months. But more importantly, it's an extraordinary education, a roadmap for your success. And it's yours risk-free for the next 30 days. Just go to the homepage of TFNN.com and click on my name, Steve Rhodes, and then Mastering Probability, because everyone needs a success strategy. For most, it's a competitive edge, the will to win, the drive to overcome any obstacle. Whatever you call it, winners find a way. Find your way to Mastering Probability today, because your journey to extraordinary rewards is just one click away.